Okay, Professor Jim Schultz here for my Finance 512 class. I wanted to go ahead and shoot one of my live trading sessions here. It is Friday, November 8th, according to that little guy right down there. And I actually saw this setup yesterday, and I actually put the trade on. I probably triggered in the morning, but the setup is still valid and it's still a really good teaching experience. And so you might notice my platform looks a little bit different. I'm actually in my Forex broker software. I'm utilizing the for the purposes of this video, I'm utilizing my demo account on my other software platform. And so I'm looking at the fiber here. I'm looking at your Euro USD pair, and this is a daily chart, and this is a really good this was like an A plus setup. The only reason it's not A++ is because today is was the release of the jobs report from last month, and so that causes a lot of chaos and volatility. And I don't typically trade non-farm payrolls just because they are. You might as well go buy a lottery ticket and just see if your numbers come in. I don't typically like to do that. I like to take a little bit more of a methodical approach in my trading. But nevertheless, this is still a really good teaching example. And so, okay, so this daily candle here on the end here, this is today. This is Friday. Okay, so yesterday when I put this trade on, I saw this candle, right? So if we scroll over, that's essentially what I saw yesterday when I said, okay, there's a little something here. And here's what I saw. There was basically three things that notified me to this being a pretty good setup. Okay, here's the first thing. If you notice from right about here, right, the market was kind of ranging for a little while, and then right about here, the market started to make a nice little uptrend, right? And so my chart is clean right now. I removed all the analysis because I'm going to walk through my analysis step for step and show you guys exactly what I was thinking when I went into this trade. So the first thing I want to do is I want to plop down a label right here. So I'm going to call this a low. So we'll mark that with an L. So that is a low point, right? This is a high point in the chart. Again, we're doing some trend analysis. Now you may notice this high didn't really go too much further past this high. So when this happened, this was back in August, right? I actually remember looking at this and I was like, okay, if we're still range bound, you could short this top and play for a move lower, but I decided not to because I didn't like the confluence at that time. But then what happens? We have another low formed right here. So kind of you got this fractal right here. This is another low point. Boom. But what is interesting about this low point? It is a higher low, right? It's obviously higher than that low. And then what do we see? Well, then we had another. You could put this high right here, and I actually did have this high right here in this moment in time. But I'm going to go ahead and just mark this as my new high because it is a higher high, and after what happened here, this is the more prominent high that I want to focus on. Low, high, higher low, higher high, right? So that alone is the makings of an uptrend. So that alone makes me think, all right, I'm in a buying program. I'm going to stalk buys. I'm going to hunt buy opportunities to get long. I'm not interested in getting short if I'm focusing my trades off of the daily chart, which I am. Okay, so that was the first piece of evidence that showed me that, okay, I may have something here. We have an uptrend. Here's the second piece of evidence. Right here, where it was range bound, this is an area of resistance, right? So here's what I'm going to do. I'm going to draw a horizontal, and again, my tools here are going to be different from Thinkorswim, but I'm going to drop a horizontal line, basically right about there. Okay, and what do you see? It's exactly at those tops. It's pretty much at those tops. Again, this is very much a subjective thing. You're not looking for specific points of. You're not looking for specific price points. Instead, you're looking for areas of support and resistance. And what do you notice? This candle, this was Thursday's candle, Thursday's daily candle. It has respected that line really, really well, right? I mean, it tried to make a move lower and break that area of now support, but it was unable to do that, right? And so that is the second piece of evidence that I have put into place here, thinking, all right, this looks like a good opportunity to buy, right? Here's the third piece of evidence. Look at this candle itself, right? Again, forget this one. Just focus on that one. In fact, I'm going to zoom in a little bit, right? Let's just look at this candle right here. I'm even going to stretch this out a little bit. That is not a true pin bar, right? That's a pin bar. That's a pin bar. And there are some like that. These two are both pin bars, right? You can see really small body, really large wicks. But that has a long lower shadow, and so even though it's not a pin bar, when I take that candle along with the other information I have with an uptrend and a nice clearly defined area of now support that was resistance, I've got three things telling me that, man, this might be a nice trade to take. All right. And so those three things alone got me into a buy program here. I want to get long on the fiber right now. I want to get long at this point, and you can see I did get long at, I guess it was 1 o'clock this morning. I got long at 133.92. And so I did not get long on the close of this candle. I played a little bit of a retrace, which did indeed happen, and I got in at a slightly better price. And so what I have done now, and this was the icing on the cake, I put my stop loss just below, literally 1 pip below the bottom shadow of this daily candle. Now, there are several ways that you could do this, right? You could give yourself a little bit more breathing room. It goes with trial and error. Based on some other parameters that I'm not going through in this video, I decided to keep a pretty tight stop loss here right below the bottom of the shadow. And the basic idea is because below this, if it breaks this, it may shoot for this low right here. It may try to take out this low, try to blow out this swing low. And I don't really want to be along for, you look at the low of this candle. The low of that candle is 132.94. I don't want to be around while this thing tests 131. That's 200 pips. If I'm wrong here, I want to cut this guy off right here. Okay, but here's what's great. So I'm risking about 100 pips if you look at the math. I got long at 133.90 approximately, and my stop loss is 132.90. So I'm risking 100 pips. Well, I'm in an uptrend, so I am fully expecting the market to make a higher high. I am fully expecting the market to blow out this high and move to even higher prices. And so I have actually set my take profit, my limit sell here at 138.80. I think the market is going to make a run at that 139 level, and I want to be around when it does. And so from my entry point, we're looking at about 500 pips on the upside, 100 pips on the downside. That is a 5-to-1 reward per unit of risk, right? I like this trade a lot. Now, a lot of times I'm going to be wrong here. I'm not, if I hit a trade like this 40% of the time, then I'm going to make a bunch of money because I'm winning $5 for every $1 I lose, right? Now, the non-farm payroll, that's part of the reason why you see this bearish decision candle. So, I'm down 37 pips as it stands right now. So we'll have to see how this thing plays out, but it's probably going to take a couple of weeks for this guy to materialize because these are daily candles. But I like this setup. It's a daily chart setup. Hopefully you guys saw a little bit about how I trade, and hopefully this helps you a little bit with your technical analysis, as I've definitely utilized some of the tools that we've talked about in class. All right, here's one final tool that I didn't talk about in class, but I think I mentioned, hey, if you really want to do something pretty unique, something kind of cool, start adding some Fibonacci analysis to your trades. Okay, Fibonacci analysis is swing analysis. So you've got basically this dominant swing right here from our low to our high, right? This is essentially the dominant swing in price that is in play right now. So I'm going to take, and the purpose of this video is not to teach you guys about Fibonacci, but it's going to apply Fibonacci analysis. So I'm going to fib from the low up to that high. Okay? what Fibonacci basically, you can use Fibonacci in a couple of different ways, but one of the ways that I personally use Fibonacci is when I'm looking at a swing and I'm interested in getting in on that swing. Fibonacci gives you an idea of some good points to possibly get in on a retracement in price. Like this would be the upswing, right? This right here is the retracement in price. As we talked about in class, the markets always move in waves, right? So I'm expecting upswing, retrace, upswing. That's what I'm banking on. And so I let this thing move higher. I'm watching the retracement. I see lots of reasons to get in at this point that we've already talked about. Well, here's one final reason, I guess a fifth reason that this is a good area to get in. In my studies, in my research, and my experience, some of the most optimal Fibonacci retracement levels to enter a trade are these three levels. 62%, actually 61.8%, 70%, or 78.6%. Those are retracement levels of the current swing, right? This candle, if you notice, it pretty much hit that 70% retracement level and then bounced higher. So it pretty much hit this level and price was rejected and wants to go higher. So this tells me that, man, this is a really, really nice setup for all the reasons we've already talked about, but also it's right in the sweet spot of my Fibonacci analysis optimal entry point. And so for all these reasons, I think this is a really good trade. I'm pretty confident about this trade, and we've gotten through the bulk of the non-farm payroll now that it's 11 o'clock, and so I was afraid that the jobs number might blow out my stop, but it almost did. It went all the way down to 133.16, so it was only about 25 pips away, but I hung tight, and now I'm banking on a rebound higher. So here's some fiber analysis for you on a November afternoon.